Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion, your weekly or bi-weekly, I guess I should say at this point, trading show to catch up on everything related to crypto and TradeFi markets. You are joined today by myself, Nick Mancini, Director of Research at Trade the Chain, and Monty. Monty, what is your official position at Trading Rebellion?
Senior crypto analyst at Market
Senior
Rebellion.
crypto analyst. So you've got some senior analysts sitting on the call today who do nothing but stare at charts and press buttons. So we're going to deliver exactly what we're seeing and staring at all every day of the week to you. So a lot of stuff happened, today, Monty. I think we finally had a relaxing weekend, right? Where we didn't have too much volatility, didn't have too much news, but certainly back at the desk, 9:30 a.m. U.S. markets open. We get hit with some kind of good news and then some kind of bad news. So let's start with, I guess, the good first and give everybody some fuzzies before we unfortunately come in with maybe the less happy stuff. So today, it was notified that MicroStrategy acquired about 6,400 Bitcoins for at an approximate value of $150 million at an average price of 23.2K Bitcoin. Now, there's an additional story on top of this. I believe they repaid their Silvergate loan and saved actually 50 million worth of interest. So they basically took that and said, I'm going to go buy some more Bitcoin with it. So we still have a Bitcoin believer. His name is Michael Saylor. I think if he was no longer a believer, it would definitely be in the realm of Satoshi renouncing Bitcoin at this point. So very glad to see he's still got his conviction. We obviously got some more bad news today, but just on this, the fact that Michael Saylor, pretty much the biggest Bitcoin bull other than, the Satoshi wallet itself, is still buying Bitcoin at these levels. What does that signal to you, Monty?
Yeah, I mean, obviously that's a good sign. I mean, he's made some questionable buys in the past. Not always, has he marked the bottom. That being said, like you mentioned, the fact that he still has conviction after everything that's happened in the last 6 months, everything that not just in terms of price action, but in terms of like crypto infrastructure and also the outlook for the markets over the next 6 months. He's clearly got a positive outlook on crypto. He's got a very long-term view, and I think that's what you got to understand when you talk about MicroStrategy or Michael Saylor. Like, he's in this for the long haul. He's in this for the next 10 to 20 years, and he believes that Bitcoin is the future. And he's willing to take a bet that even if we go down another 10%, it's not really a whole lot of skin off his back. I mean, it would be bad for their stock, of course. We've seen that in the past, but really, he still has that conviction, still has that long-term plan, and clearly is content with accumulating Bitcoin at these levels. So although it may not mark the bottom, it is indicative of the fact that we have big players still willing to step in. And I think that's, really encouraging. So, but
I
what are your
also
thoughts?
find it fascinating that, the criticism of Michael Saylor and MicroStrategy seems to roll off like water on a duck's back. He's gotten tons of hate for buying early. He got tons of hate for buying late. He gets tons of hate for holding. So the guy is, he's a conviction, nutcase. But I think, this, I'm not ready to say this now, but the fact that he's holding such conviction, and if Bitcoin does experience a move back to recent highs within the next couple of years, he's going to look like a genius. And it does make me wonder whether or not more corporations will do this. And I'm not talking about an Apple or a JP Morgan, but if smaller mid-sized companies are doing this to potentially, quote unquote, protect against inflation or unbank some of their capital to further protect it from the current financial situation, I don't think that is entirely far-fetched looking into the future. Again, not ready to say it today or tomorrow, but 6, 12, 24 months down the road, I think we're more likely getting into the realm where it's not just El Salvador and MicroStrategy making buys. If Bitcoin can hold these lows and actually power through over the next year or two, I think that's going to signal to a lot of people that although the volatility is present, if you get in near the lows, you've got a lot of value to accrue. So, Monty, any thoughts on that, or do you think it's still a little bit far fetched?
No. I don't think it's, that far fetched. Like you said, he gets criticism basically no matter what he does. But I think, like I said earlier, the fact that, he's showing signs of conviction this morning is encouraging. But, unfortunately, we didn't really have too much time for this good news to marinate. And, it didn't really get to play a role in the markets because we were hit over the head with some even bigger news, which I guess we can dive into now, and that is the CFTC suing Binance and CZ. This really rocked the markets hard this morning, Nick. Not just crypto, but also traditional equity stocks like Coinbase getting hit hard on the back of this news. This is some important stuff, definitely worth talking about. What are you seeing here from CZ's tweets? What do you think is worth mentioning in this case?
So I think that there's a really good side and a really bad side to this argument, and well, maybe not really good, but there is a silver lining potentially, and it is the CFTC's jurisdiction over Bitcoin and Ethereum. And we won't get into this whole legal argument, but we all know that there have been judges that have ruled multiple times and have reaffirmed these rulings that Bitcoin and Ethereum are both commodities that under the purview of the CFTC, not the SEC. So we know that Gary Gensler is really kind of the Grinch of crypto at this point. The CFTC, although weary and cautious, is much more supportive and a believer in the ecosystem. Certainly, whether or not altcoins are of their favor, not a discussion. But Bitcoin and Ethereum definitely of the favor of the CFTC up to this point. And so that's a good thing, is that we're reaffirmed that Bitcoin and Ethereum are in the court system through CFTC oversight. But the bad thing is that they do actually seem to have Binance kind of backed into a corner on some sort of potentially nefarious deeds. Now these are all accusations that will all come out in court, but having the admittance or perceived admittance of potentially forwarding plausible financial crime, as well as Binance having or CZ, Binance's CEO, having his own house accounts, as well as other Binance leadership. If you just to kind of backtrack it, if you're even trading equities at JP Morgan or Goldman Sachs, you're not allowed to own equities or trade equities. A lot of people, the reason DeFi was so big back in 2021 is all those smart heads that couldn't trade equities were all going to DeFi because there was tons of money to be had. So when you think about it like this, just from basic US trading rules and global trading rules, this makes sense. Having CZ not have personal accounts on Binance and not trade against us, I'm for that. So shame on you, CZ, for doing that if that was the case. But at the end of the day, the way I see this, and I'm not a lawyer, so take everything I say with a grain of salt on the legal side, is that this seems like something that Binance is going to pay a fine for. This does not seem like it's going to take down the cartel or, the cartel, so to speak, the Binance, meme cartel. But this doesn't seem like it's going to shut Binance down. It's certainly going to throw a wrench and a pickle into potentially some of their acquisition plans and their global growth plans. But this, to me, seems like at the worst, CZ takes a step back. Binance pays a fat fine. They rechange some internal, operations, and eventually it's business as usual. So that's how I'm seeing it now. But what are your thoughts, Monty?
Yeah, I completely agree with everything you said. And I just want to add the fact that, one thing that was really prevalent in the CFTC's case against Binance, one thing that they mentioned quite often was the fact that Binance kind of pseudo encourages users to use VPNs to get around, regulations and trade perpetual futures and derivatives, which is something that we can't do here. And rather than blaming Binance for encouraging people to get around these loopholes and use VPNs, I still can't wrap my head around why regulators still haven't been able to properly bring US citizens a regulated perpetual futures exchange. It's ridiculous at this point. It's clear that that's what people want. They're accusing Binance of encouraging people to use a VPN. I don't need any encouragement to use a VPN to trade on Binance, because I'm not going to trade on Coinbase and get screwed on the fill, with a 5% gap, and then my stop loss doesn't get hit, or there's very limited options here as a Western crypto trader. So I didn't feel any pressure from CZ or anything like that. Binance is the best option, and people are going to go to the best option. And I've felt passionate about this for a long time. Just instead of punishing these companies, regulate them, bring them onshore. We're losing tons of volume to offshore companies like the United States is, because of the fact that we can't figure out how to regulate these businesses. And until we do, we're going to continue to have these problems. I think it's ridiculous that the CFTC
Or
is
at the
saying,
very least, just decrease the leverage offer. Like, I don't think anyone's going to be pissed if they're stuck at 5 to 10x leverage. If I go trade
yeah,
CFX, if I'm trading 1x leverage, it's like I'm trading 10x on Bitcoin anyway. So, give me at least something. I can trade 3x levered ETFs. Why can't I do that? I can trade
yeah, right,
options. I can go on right now and spend 100K on options and lose it tomorrow. But God forbid
exactly.
I longed Bitcoin. You know what I'm
Yeah,
saying?
yeah,
So
it's so hypocritical. And it felt like, with everything that's happened in the last 6 months, with FTX and whatnot, that finally either Gary Gensler or the CFTC, like you pointed out, I'd much prefer to CFTC, step in and properly regulate this. Like, it goes all the way back to like 2014 when BitMEX was like the biggest exchange in crypto, and that's where people were trading perpetual futures. Like, they say the reason why BitMEX was banned and Arthur Hayes was arrested is, they say that they're protecting the investor and whatnot, but like, you know they, like you said, they don't do that when it comes to options. I could go and blow out my entire savings account right now if I wanted to on options, and no one would stop me. There's no protection there. So the fact that we don't have like proper vehicles to trade crypto here yet, and the regulators don't seem to be in any rush, and instead are blaming it on the companies as like forcing us to circumvent their regulations, just seems so backwards and stupid to me. But yeah,
Oh, I completely
unfortunately,
agree with you, Monty. And before we move on, the last thing I want to say on this topic is BitMEX was, had a very similar lawsuit by the CFTC, I believe, about 2 years ago. Right
mhm,
around there, not exactly, but very similar lawsuit. And again, today, BitMEX still trading. Arthur paid a fine. Arthur, got his slap on the wrist and paid his dues as he, should have. I don't think anyone is saying that he was a saint or ran the exchange properly. I don't think we're saying the same about CZ. Personally, I would appreciate anyone from Binance not counter trading me or my friends. That'd be very great. So I would not mind if the CFTC does their dues on that. But in terms of the lawsuit itself, this has happened many times before. CFTC a little bit more friendly than the SEC. At the end of the day, what I would expect, take it with a grain of salt, is this case will be dragged out long term. There will be a fine, and everything will end up business as usual in the future. And of course, regulation by enforcement. The main risk is what happens when your enforcement changes hands in the next presidential cycle. So, and I believe Gary Gensler's tenure has only got about 3 more years. I don't know exactly what the CFTC looks like, but he's going to be easing out eventually, and I doubt a Republican is going to allow Gary Gensler to stay in his post if the Republicans did take the White House. So, all things for consideration long term, but this is not the end all be all, and this is not reason to run the hills. Bitcoin is still above 26.6K, and I think that is a major win for us today with the action from the CFTC. So let's go ahead and transition to price action and figuring out what's going to happen this week. Just as a quick pause before we dig into price action is for this week economic data. We have Fed governors speaking every single day this week, which typically will breed bearish volatility considering the Fed has been quite hawkish. And then we also have PCE on Friday. So PCE is obviously the Fed's preferred inflation metric. So if that is a beat, we should see bullish volatility. If it's a miss, we should see bearish volatility. And the implication of Fed governors speaking Monday through Thursday is certainly bearish volatility, but doesn't mean that is going to be the case. So let's dig into Bitcoin and figure out what's going on. So we touched 28.6 over the weekend, which was previous resistance from last Wednesday. Well, I'm sorry, not over the weekend, last Thursday. We tried to get up there over the weekend. We could not. And we made our way back to 26.6K, which I've said many times is pretty much the last support level for the bullish momentum trend. So we swept the lows of last week's range, which is a good first step for any kind of cleansing of the cycle. But we're still not above the estimated 200 moving average, which also coincides with the weekly VWAP. And it does seem like the highs are getting farther and farther away after the price action today. So Monty, what do you think? We're above 26.6K. We swept the lows. but we're still under the VWAP, which to me is always a concern early in the week with Fed governors set to speak every single day. So we're looking at Bitcoin. What are you seeing? What are you looking for?
Yeah, so my outlook on Bitcoin today and for the rest of this week is not too great. Last week we talked about how, perhaps we were going to start to see some negative price action coming in. And I think we are really seeing that today. From a daily perspective, if you like switch to, a daily chart, or if you just want to throw up my screen real quick.
Oh, yes, sir. Sorry
Um,
about that.
yeah, no problem. You can see that we got this bullish or bearish engulfing candle at the top of an uptrend, some clear distribution of supply here anywhere above 28K. It seems like no one was content to hold above that level. That in conjunction with this bearish engulfing candle, with this wide divergence from the moving average, it's the 20 period smooth moving average, I think we are set for a bit of a pullback this week. Um, that being said, I still think Bitcoin dominance can climb. It was off to an interesting start this morning, but I still think that, uh, yeah, like it pulled back this morning, but I still think we're going to see Bitcoin dominance continue to climb as alts drop harder than Bitcoin. You can see it pretty much just looking at my watch list, just an eyeball here. But most of the alts down 4 to 6%, whereas Bitcoin's only down 3%. Typically a good sign. But getting back to Bitcoin, I think that when you see this sort of formation, right, distribution at the highs, and it's not just your average distribution, right? We have volume telling us that the sell pressure is getting greater and greater each time we came up and tested these levels. Increasing sell pressure with decreasing bullish buy pressure is signs that we are due for a pullback. Not necessarily unhealthy, because we did get a bit overextended on the back of that banking narrative news. So a pullback to this moving average, perhaps at around 26K or 25.5, I think is not out of the realm of possibility. This was 25K obviously was a significant hurdle in the past, and I could see us kind of retracing to that level towards the end of this week, just from a technical perspective, not even taking into account the negative news from seizing a Binance. But
What was that
also,
number on your end? Like 25 is what you said?
yeah, about 25. I'm looking at basically, this former range of resistance here where we saw some pretty strong supply distribution. And also that would line up nicely with this 20 period smooth moving average, which tends to be good indication of support or resistance during a trending market. So I'm looking at around like 25.5 as a level where we could plausibly see a bounce. But of course, gonna just be patient with this one and, let it play out. Not necessarily looking to short it per se, because we are seeing some decent buy pressure come in below 27K. So I'm just sidelined right now, not necessarily doing anything with Bitcoin itself. That being said, Nick, one thing that I did want to talk about is Coinbase. And this ties in with the Binance news, the CFTC, the SEC, Gary Gensler, everything that we've been talking about so far in this show, Coinbase is being affected by. And it's kind of a running joke in our community over at Market Rebellion, but like I am very harsh on Coinbase in terms of like not only their value as a company, but the way that analysts on TV, like people on CNBC, will value this company or attempt to value this company. Like this morning, I was watching CNBC, which I don't do often, but they were talking about how, wow, I'm so surprised to see Coinbase down 10%, despite the fact that one of their largest competitors is getting a slap on the wrist from the CFTC. Like, you'd think that'd be a good thing. No, that's not how this works. Like, when the space gets hit, when one area of the space gets hit, it all gets hit. And, especially when it's something like as big as Binance, um, you know, of course you're going to see negative price action in Coinbase. And I
And
still think we haven't seen the extent of this yet, because we haven't seen the extent of regulation come in. And as long as we have that like boot of regulation looming over our heads, I think Coinbase is in for some uh, pretty intense negative price action. So, you know,
Well, yeah, I was gonna hop in there and like the reasoning behind you, because typically, if a Goldman got hit, for something that was Goldman specific, JP Morgan would typically take some of that market share because Goldman clients will move to JP because JP is doing it right, whereas Goldman was doing it bad. That's not a real scenario, of course. Just so Jamie Dimon, if you're listening, please don't sue me. But it's the scenario in which that if Binance is getting sued for regulatory mishaps that there is no defined walls or structure around, then the idea is that, well, if Binance is getting hit for this, will Brian Armstrong get hit for the same stuff? And I would say, out on a limb, I don't know this for sure, I would assume that Brian Armstrong is probably not counter trading his customers, but we don't know that for sure, and neither does the market. And there's no rules around what crypto companies can and can't do. So the market is making the assumption that if there's smoke in one direction, there's probably a fire in the other. So that's
exactly.
just to further explain kind of Monty's standpoint there.
No, you're spot on with that. Spot on. And also one thing I did kind of want to tie this into a little bit is CJ's not here today, but um this is something that he wanted me to mention to the audience, was his kind of position in gold and what he sees for Bitcoin. So he's thinking that, one thing that we've done a lot of, and I mean, this show is called Trading Rebellion, right? And our company is called Market Rebellion. So one thing that we try and do is kind of take on a contrarian perspective, not necessarily get, caught in with the herd as they're being led to slaughter. And one thing that CJ points out here is gold futures on a weekly perspective. Retail traders are net long. And this is the COT data from Friday. So we have retail traders getting extremely long. And when you see that, it's typically a sign, like, as you can see here, we had an increase in the longs and even the large speculator longs. That typically is indicative of a market top and followed by some, overwhelmingly negative price action. And he actually went ahead and tied this in with the Dow Jones as well, because the Dow Jones is the one indice where, also looking at specifically COT data, we have retail traders increasing their puts and getting more and more bearish week after week in the Dow Jones, which from a contrarian perspective tells us that, hey, this might climb a little bit higher before we see, a further correction in the Dow. And, we've been talking a lot about the Qs, a lot about, innovation, and we don't often talk about the Dow Jones or even gold for that matter. But I think looking at the way traders are positioned right now is kind of like the only thing that we really have to go on, because there are so many other variables in the market. And I think right now, because of that fact, it's a great time to be kind of counter trading the masses. And right now, the masses are long gold and they're short the Dow Jones. So an interesting play is perhaps this is the Dow Jones gold pair, getting long the Dow, short gold. And you can see that each time we've dipped into this range, we've been met with some very rapid positive price action, either to the midpoint of the range or to the top of the range. And when we're looking
And
to trade,
power of three is really strong too. So if that third holds, you would expect a pretty strong follow through.
yeah, exactly. We got this perfect third retest of support. And, one thing that is so important when you're trading is defining risk reward. And the way I see it, the red here is the risk. This is the reward. If this support breaks and we fall down below 16, immediately cut it. Take that that risk to reward ratio is looking pretty good. And I think that we could plausibly see the Dow continue to rise while gold continues to fall, just on the back of that COT data. So that was what CJ wanted to share. And I also have, taken on a similar position as well, because, right now, like I said, Nick, we don't have, it's, the market seems very confused and traders seem very, very confused. Like the title of this show, is it time to be bullish or time to be bearish? Lots of people position bearish, and from a contrarian perspective, from that rebellious perspective in me, I kind of want to remain long equities for the time being, as retail traders are still short. But specifically, this pair here, Dow Jones versus gold, looks interesting. So, unfortunately, we don't have COT data for Bitcoin. But if we did, I would imagine it would look pretty similar to gold in the sense that people were getting long following that banking crisis. We had retail traders stacking in the longs. Of course, we can look at funding rates or perpetual futures data for that, but those rates are pretty neutral right now. So that this is a trade, like really kind of one of the more crowded trades, gold and the Dow Jones, and thus I think provides some of the most opportunity in the market right now.
Well, I think one of the fascinating things is you just kind of mentioned this is like Bitcoin's correlation. And so, and if you kind of look at it on a day by day basis, it's almost like a coin flip at 9:30 open are we going to correlate with gold today? Or are we going to correlate with equities? But on the grand scheme of things, I think the equities correlation is still quite strong. We obviously did have some inverse relationship, in early to mid May, but for the most part, it's been relatively, correlated in terms of general movement. So even down to today, the drop in Bitcoin from the CZ news was timed with an equities pullback almost to the T. So in my opinion, the price action was exacerbated due to the news, but Bitcoin was going to curl back whether or not CZ got sued regardless, I think, and from this outlook. So if you're continually looking at this, and what I'll do is I'll go back to the candles, I'll bring my chart back up with all of my goodies, and then remove Bitcoin. And if we're looking at equities, I'm not shorting this right now. I'm probably thinking about a short if we get rejected at the 40-10 level again. But like Monty just said, I don't think I'm shorting equities just yet at this level. And if we can zoom out a little bit on the 4 hour, we're above the estimated 200 moving average and the VWAP on both, the 4 hour as well as the 1 hour. And so right now I'm looking, this is looking pretty good on a low time frame perspective for me. So I'm not ready to go ahead and start shorting Bitcoin and ETH with vigor. I do kind of agree with Monty's, analysis that, equities don't look half bad right here. And if I'm thinking that equities don't look half bad, then I'm saying if crypto, meaning, if Bitcoin can hold this 26.6K level, which we've defined as kind of last support for the bullish trend, if this can survive and equities start moving a little bit higher, to me, the contrarian take is that, still looking for Bitcoin longs. I'm not looking for ETH longs. I'm not looking for ADA or whatever longs, just Bitcoin right now. So I think that's an important consideration is the correlation with equities is still there, and equities don't look half bad. And Bitcoin is, of course, holding 26.6. But like Monty also said, is if that 26.6 level breaks, and very similar to his analysis, I've got support at 25 flat based on the previous trading range from February and earlier in March. But also the 4 hour estimated 200 moving average is sitting right around 25K on the dot right now too. So, we've got a lot of confluence of opinion down to that level if the 26.6K is broken. But again, that's an if-then statement. If 26.6K is broken, then Monty and I are looking for that 25K level. And then one other thing I wanted to mention is something we've discussed a lot, but we haven't seen follow through in either direction, actually. So many of you will probably remember this, the segment in which we talked when it was breaking down. And then, of course, we had, a strong candle back up. But we've not been able to break the support level, or I guess now resistance, for ETH Bitcoin. And until this is broken, this is basically my signal on focus on Bitcoin or focus on alts. And as long as this is underneath that white line, that 0.065 level, I'm looking at Bitcoin and not alts, because this is telling me that alts are going to perform worse than Bitcoin. Therefore, what I'm looking for right now in my trades is I'm only longing Bitcoin and I'm only looking for short altcoins. And that's kind of how I'm doing it, and kind of having it's not exactly a beta neutral trade, but it's a little bit more of a safer trade given what the market is telling you based on this ETH BTC chart. So as long as this is, seeping lower underneath 0.065, I'm longing Bitcoin, I'm shorting alts. And as long as Bitcoin is, again, above 26.6K, I'm longing Bitcoin, I'm shorting alts. If this breaks below 26.6K, I'm shorting it all. So that's pretty much what I'm looking at right now.
Yeah, I think that's a great way to sum it up. That ETH BTC pair, I think, tells you everything you need to know about the relationship between Bitcoin and the alts and where the beta is going to be in the coming days to weeks. And that's, the most important thing to know. And, I brought up that Bitcoin dominance chart earlier. Although it looked like it was about to pull back this morning, it still looks like it can climb significantly higher. I mean, we've seen it climb as high as into the 70th percentile. I feel like these alts could plausibly give a lot back before we, see Bitcoin, before we see them actually start to show signs of strength. But in the meantime, I think you just need to be cautious, keep an eye on this chart. And like Nick said, this is the trigger for me to when to switch from like Bitcoin into some of these higher beta assets and take a little bit more risk.
Yep. And I think Monty's got one more chart for us, but I think the moral of the story here is, in relation to narratives, crypto is always narrative driven, always has been, will likely always will be. And if we focus on what the narrative at hand is that Bitcoin has the narrative with all of this regulatory and banking crisis nonsense. Bitcoin still has the proof of work, deflationary network aspect. It's obviously the oldest, it's the most trusted, hasn't been hacked or anything like that. Altcoins are still very much possibly securities. Now, Monty and I are very much of the opinion that, let us play, let us have our fun, remove yourself SEC. But we have to understand that Bitcoin and Ethereum are really the only assets that have protection based on CFTC rulings. So therefore, alts in terms of the broader narrative have a worse narrative than Bitcoin. So it makes sense that Bitcoin is getting all of this attention and price action, whereas alts are being siphoned because, right now there's not a lot of new money in the market. That money is currently going to Bitcoin. Eventually it may spread, but right now the narrative is very much Bitcoin in focus. So Monty, I think you have another chart though that you wanted to talk about.
Oh yeah, just last thing to bring it full circle. I think a lot of people already know this, but if you look at the levered liquidations, significant amount this morning, 110 million, and it's kind of the ironic thing, right? Is like the CFTC trying to protect traders from liquidations, and then they put out news that forces liquidations. But that's just the way it goes. And this tells me that we may not see all that much more volatility for the rest of the day. I already have 110 million worth of long squeezed out of the market. I think until the Asian session rolls around, we may see a little bit of flatter price action for Bitcoin. So expect some consolidation around 27K. We're kind of back to neutral on these funding rates. Longs have been shaken out. Shorts aren't piling in just yet. So until that happens, I'm kind of just remaining neutral. But yeah, that is
Completely agree with you. And like I said before, my two levels for Bitcoin, really the only levels I'm focusing on for the broader market is 26.6K for Bitcoin support, 28.6K for Bitcoin resistance. Unless we break one of those two, we're stuck in a range and I'm trading the range and I'm ignoring everything else, except for I'm probably shorting alts. But, just the final note is, and we'll discuss this on our Thursday show. Again, we have PCE on Friday, which is going to be a very important number considering we just got the FOMC rate hike last week. We want to see this improve to continue the narrative that the federal funds rate is topping and that the Fed's job is more or less complete. And then again, please remember that we have Fed governors speaking every single day this week, and they are typically hawkish, considering Jerome Powell has been striking a hawkish tone. Whether or not you think that the FOMC meetings are dovish or hawkish, they're raising rates and telling you that they're going to deal with the problem right now instead of trying to kick the can down the road. Whether you believe them or not, that's what they're saying. And therefore, I would expect more of that rhetoric out of the Fed governors as they're talking to the public freely. So just keep that in mind this week. Although again, not bearish Bitcoin because of this, but we do understand where the support and resistance levels lie. So I think, unfortunately, Monty and I are a little bullish right now, but, the beauty of trading is that, it's if-then statements. We don't need to make a decision until something happens. You can be patient and protect your capital. Monty and I will be doing that, throughout this week, and we'll obviously update everybody on our trades later on this week. So Monty, do you have any closing remarks, or, you good for your analysis today?
No, I think that's all I got. You summed it up nicely there. Manage risk. This isn't an easy time to be trading the market, but like you said, you don't have to trade. Wait for conditions to look more favorable. Wait for things triggers to get hit. Be disciplined. Stick to your stop losses. Stick to your take profit points, and there is money to be made in this market. But that's all I got for today. Thank you guys so much for joining as always. Nick, I will leave it with you, my friend.
Beautiful. And I completely agree with Monty. Be patient, tackle the trades when it's opportune. And we are here, 2 times a week to help you with tackling exactly that. So we'll be here on Thursday. Alex will be back, and we'll be continuing this trend every Monday and Thursday in the near future. And of course, I help with Trade the Chain. So visit tradethechain.com for any of your cryptocurrency analysis needs and community needs. And Monty, please let everybody know how they can find, Market Rebellion, and then we'll go ahead and close up shop.
Yeah, you can find CJ and I over at marketrebellion.com/try crypto. We got a crypto trading room over there with Tradingview integration, 24/7 chat. We're always hanging out there. So if you guys got any questions, you can stop by and ask them there. But if not, have a great rest of your day, and we will see you guys again on Thursday. Thanks so much for watching, and take care.
Thanks so much. See you on YouTube. See you on Twitter. Visit us next time. Peace.